So next unit, national income. National income, the meaning of national income is, in general sense or general parlance, the total value of goods and services produced by a country during a particular period of time, normally 1 year. Goods and services produced by the country for a particular period of time, say for 1 year. This is known as national income. So the goods and services calculated at market price, which is important. The amount of goods and services can be calculated at market price. Then the national income provides a comprehensive economic activities. National income is a measurement of the growth of nation. National income is an instrument for economic planning. National income is one of the most significant variable for macroeconomic analysis. So from the above sense, we should study about the meaning of national income, the concept of national income, measurement of national income, and the uses of national income should be very clear. Understanding is essential from the above points. Comprehensive economic activities, measurement of that national income is used for the measurement of economic growth. The national income is an instrument for the comprehensive economic planning, and the national income provides the most significant variable for macroeconomic analysis. So from the above important points, we should very clear understanding about the meaning, concept, measurement, and uses of national income is essential. Then the concept of national income introduced by for the first time Simon Kushnet, who was the Nobel Prize laureate. Simon Kushnet is a Nobel Prize laureate. He only introduced the concept of national income for the first time. Then two definitions for national income. According to Alfred Marshall, national income of the country is the factors of production, labor and capital employed on the country's natural resources and producing of goods and services annually with aggregate consumer goods and services. It is always called as net income of the country or national dividend of the country. So it is a definition given by Alfred Marshall. So there are four factors of production. Out of that, labor and capital as the factors of production, employing on the natural resources of the country, which result in producing of goods and services annually in an aggregate manner, which is known as net income of the country, or otherwise known as national dividend. But in case of Simon Kushnet, he explained what is national income. The net output of commodity and services or goods and services flowing during the period from the country's productive system to or in the hands to ultimate consumer, and also including of capital goods. So this is the definition given by Simon Kushnet. So what he explained is flowing of goods and services from the country's productive system into the hands of ultimate consumer in addition with the capital goods. Not only consumer goods and also capital goods. So these are the two definitions for national income. Next topic is basic concepts of national income. What are the basic concepts of national income? It's very important. First of all, GDP, then GNP, NNP, NNP at factor cost, NDP, personal income, disposable income, real income, and GDP deflator. These are all the basic concepts of national income. Now see one by one. GDP. GDP refers to the total value of goods and services produced by the country or within the country, which is calculated at market price, is known as gross domestic product. GDP refers to gross domestic product, the total value of goods and services produced within the country, which are all calculated at market price. How you calculate means C plus I plus G and X minus M. Then G and P, the total value of goods and services within the country plus income from abroad. So what is the difference between the G and P and GDP? GDP is calculated goods and services produced within the country only. But in case of GNP, the total value of goods and services produced by the country, in addition with that income from abroad, included in the GNP. There are 5 types of income included in GNP. What are the 5 types of income? Number 1, value of goods and services which satisfy the human wants, that is consumption. Value of goods and services produced by the country which satisfy the human wants, which is known as consumption. Second one, gross domestic investment in capital goods, fixed capital formation, residential construction, finished goods and unfinished goods, which are common in the investment, that is supposed to I. Gross domestic investment in capital goods, fixed capital formation, residential construction, finished goods and unfinished goods. These are common in the investment. Then, goods and services produced by the country or purchased by the country, also included in the GNP, that is government expenditure, G. G refers to goods and services produced by the government or goods purchased by the government, which is known as G. Then net exports, that means the difference between the export and the import of the country. The difference between the total export and the total import of the country, that is X minus M. Then goods and services produced by the country plus income from abroad, also take into account. The formula is C plus I plus G plus X minus M plus R minus P. R minus P means receipts minus payments. So there are 5 entities which are included in the GNP. Number 1 C, number 2 I, number 3 G, then X minus M, and the last one R minus P. These are the 5 heads of income included in the GNP. Then NNP. NNP means net national product. How you calculate net national product? The GNP minus depreciation allowance. Gross national product minus depreciation allowance. Or otherwise, we can obtain the net national product by deducting the depreciation allowance from the gross national product. NNP is obtaining by deduction of depreciation allowance from gross national product. Then NNP at factor cost. Another concept is NNP at factor cost. It is nothing but the total payment made to factors of production. NNP at factor cost equal to total payment made to all the factors of production. How you arrive NNP at factor cost means NNP at market price plus subsidies minus indirect tax. So in such a way we have to calculate the NNP at factor cost. NNP at market price plus subsidies minus indirect tax. Then NDP, net domestic product. Net domestic product can be calculated by deducting the depreciation allowance from gross domestic product, or otherwise gross domestic product minus depreciation allowance, which is known as NDP. So GDP, NDP, GNP, NNP, NNP at factor cost. The next concept is personal income. Personal income is nothing but the total income received by an individual. Total income received by an individual in a particular country from all sources in a particular period of time and before the payment of tax. I repeat once again, the total income received by an individual from all the resources during a particular period of time but before the payment of taxes, which is known as personal income. So there is a formula for this. Personal income equal to national income plus transfer payments minus undistributed corporate profit. National income plus transfer payments minus undistributed corporate profit. Then disposable income. What do you mean by disposable income? Disposable income is the income earned by the individual after the paying of the tax to the government. After the payment of tax to the government, which is known as net income tax of net income of the individual. So disposable income equal to personal income minus direct tax. Personal income minus direct tax equal to disposable income. Then real income. Next concept, real income. National income is calculated at constant price equal to national income at current price divided by P1 plus P0. So P1 equal to price index of current year, P0 equal to price index of base year. So real income means the national income does not indicate the real income of the country because of the constant price and the current price. So national income at current constant price equal to national income at current price divided by P1 plus P0. Then GDP deflator. So last one, GDP deflator. It is an index of price changes in goods and services. GDP deflator means it is an index of price changes in the goods and services for a period of time. So that's a formula for this. GDP deflator equal to nominal GDP divided by real GDP into 100. How you calculate GDP deflator means nominal GDP into real GDP. Nominal GDP divided by real GDP into 100. So these are the basic concepts of national income: GDP, NDP, GNP, NNP, NNP at factor cost, personal income, disposable income, real income, and GDP deflator. So these are the three important topics today we have completed. Number one, meaning of national income, two definition of national income, and the basic concepts of national income.